In the unpredictable world of stocks, Realty Income Corporation, the monthly dividend company, stands out as a beacon for income-focused investors. Its business model is simple. Own thousands of commercial properties, lease them to essential businesses, and deliver reliable monthly dividends. This approach has made Realty Income a staple in retirement portfolios, prized for its consistency and predictability. With long-term triple-net leases, the company enjoys stable cash flow while minimizing operational headaches. As Realty Income stock trades around $56.25, some speculate about a meteoric rise to $1,000 per share. But is that realistic? Let's dive into the facts, the financials, and the future to see what makes Realty Income tick, and what investors can truly expect. The dream of Realty Income hitting $1,000 per share is captivating, but let's ground it in reality. From its current price, that would require a staggering 1,677% surge, an unlikely feat for a slow and steady REIT. Realty Income's value comes from predictable cash flows, not explosive growth. With historical FFO growth around 5% annually, it would take decades to justify such a price, barring an unprecedented shift in valuation or hyperinflation. A more realistic 5-year target is $75-$80 per share, reflecting solid, steady growth and generous dividends. Realty Income isn't a lottery ticket. It's a bond-like equity for those seeking dependable monthly income. The real story is compounding wealth through reliable dividends, not chasing fantastical price targets. Realty Income's financials reveal a disciplined, resilient enterprise. In 2024, revenue hit $5.28 billion, a 29% jump year over year, with net earnings of $847.9 million and a healthy 16% profit margin. Operating cash flow reached $3.58 billion, fueling both acquisitions and monthly dividends. Its A- credit rating allows for low-cost borrowing, a major edge in real estate. Diversification is key. 80% of rental income comes from retail, but 20% now comes from industrial, gaming, and data centers, plus European expansion. This mix helps hedge against sector-specific risks and inflation. However, a high PE ratio and sensitivity to interest rates mean the stock could be vulnerable to market shifts. Still, its financial foundation remains robust, supporting its reputation for stability. Since its 1994 IPO at $12.72, Realty Income's share price has climbed over 340%, about 5.7% annualized. But the real magic is in the dividends. Reinvesting them would have turned $10,000 into over $84,000 by 2025, for an 8-9% annualized total return. This performance outpaces most bonds and many income investments, though it trails the S&P 500's higher, more volatile returns. Realty Income's steady monthly payouts have persisted through every economic storm, from the dot-com bust to the pandemic. The lesson? Wealth here is built patiently, brick by brick, through compounding dividends, not overnight price spikes. Investors seeking excitement may look elsewhere, but those valuing reliability have been well rewarded. The company's resilience is its greatest asset. To understand Realty Income's strengths, compare it to rivals like Simon Property Group and Kimco Realty. Realty Income's scale, over 15,600 properties across industries and countries, offers unmatched diversification. Simon Property Group focuses on high-end malls, offering higher growth but more risk and volatility. Kimco specializes in grocery-anchored centers, a defensive niche, but lacks Realty Income's scale and monthly dividend consistency. Realty Income's triple-net leases and essential retail focus provide stable, predictable cash flow with minimal operational risk. For those seeking reliable monthly income from a diversified portfolio, Realty Income stands apart. Its commitment to growing dividends and risk management makes it the king of income-focused REITs. The choice depends on your goals, growth and risk, or income and stability. Realty Income isn't standing still. It's expanding into new sectors and geographies. European acquisitions offer inflation-linked leases, while investments in data centers and gaming properties tap into powerful growth trends. The company's signature move is the sale-leaseback, buying properties from businesses and leasing them back, ensuring high-quality tenants and steady income. Advanced data analytics now guide acquisitions and tenant selection, sharpening its competitive edge. The vision: evolve from a US-centric REIT to a global, diversified powerhouse. This strategy aims to sustain dividend growth and adapt to changing markets. Realty Income's future is about smart expansion, not reckless bets. Realty Income's dividend is its defining feature. 658 consecutive monthly payments and 131 increases since 1994. This S&P 500 dividend aristocrat status is rare, reflecting a relentless commitment to shareholders. The dividend isn't just consistent, it's growing faster than inflation, protecting investors' purchasing power. With a sustainable payout ratio and a current yield around 5.7%, the income proposition is compelling. The company's cash flow easily supports the dividend even in tough times. For retirees and income seekers, Realty Income's monthly payout is a cornerstone. The dividend is more than a feature, it's the company's very essence. After examining Realty Income's business and prospects, the $1,000 share price dream is just that, a dream. This stock is built for stability and income, not explosive growth. Its fortress-like model, diversification, and disciplined management make it a blue-chip choice for income-focused investors. If you crave high-risk, high-reward plays, look elsewhere. If you value steady, growing monthly income, Realty Income is hard to beat. It's ideal for retirees, savers, and anyone who prefers cash in hand over speculation. In a market full of hype, Realty Income proves the power of a simple, durable business model. It may never hit $1,000, but for millions, its monthly dividend is truly priceless.